Hello everyone, this is an additional review video for your Chapter 19 quiz. This one is going to be doing job cost records for job order costing. So our company here is Bateman Business Cards, and they make custom business cards. Each set of cards is made to a customer's specifics. Because each of these jobs is unique, they're going to use job order costing to track the cost of these jobs. This is the system that any company who makes specialized products uses, where you track costs job by job because your products are all individualized. On November 1st, the company began production of 5,000 custom business cards for another company called Allen Company. Bateman Business Cards Incorporated promised delivery of the custom business cards by November 4th, and they incurred the following costs during production. So what we have here are two sets of costs: labor time tickets and direct material requisitions. Labor time tickets are people punching their timesheet saying, I'm working on this specific job. In this case, I'm working on the Allen Company job. That cost of labor gets tracked and put into the cost of producing these 5,000 business cards that we're going to send to Allen Company. For direct material requisitions, that's taking things out of storage and putting them into use. So for us, it would be things like paper stock and ink, glossing, maybe. All of those materials are going to come out of our storage facility and be put into actual use on this job. And there's three requisitions that Bateman has for this particular job for Allen Company: requisitions 1, 2, and 3. We have the description of what they took out, and as well as the total cost that they had. Underneath, it says that Bateman Business Cards Incorporated completed and shipped the job on November 3rd. We need to compute its total cost. For the purposes of allocating overhead, again, those costs that can't directly be traced to it, like labor and materials could, things like our rent and our insurance, etc., we are going to have to come up with a cost driver. And Bateman's cost driver is direct labor costs. During the month, Bateman Business Cards budgeted to incur $559,000 worth of overhead costs and $430,000 worth of direct labor costs. Well, right now, we can compute what our allocation rate is based on direct labor costs. And I'm going to be working in Excel while I do this. I'm trying to narrate what I'm doing. So budgeted overhead costs, they expect to have $559,000 worth of budgeted overhead. The budgeted quantity of the cost driver, in this case, is their budgeted direct labor costs, since they're using direct labor costs as the cost driver. So that's $430,000. And to find the allocation rate, it's always just equal to your budgeted overhead divided by your budgeted quantity of your cost driver, or in this case, 559,000 divided by 430,000 is going to give us 130%. So for each job that Allen Company does during the period, they are going to allocate overhead to that job equal to 130% of that job's direct labor costs. Down here, we have the job cost record for job number 1, these 5,000 business cards that we are sending to Allen Company. Comes in 3 columns. There's the direct material section, the direct labor section, and the manufacturing overhead section. Let's start by filling in our direct material section. What we need to do this is our material requisitions during the period. So again, there's 3 material requisitions that you can see up above. Well, let's fill these in over here. On November 2nd, in requisition number 1, we requisitioned $372 worth of materials for use in this job for Allen Company. Also on November 2nd, in requisition number 2, we requisitioned an additional $675 worth of materials for use in this job. And then lastly, on November 3rd, in requisition number 3, Bateman requisitioned $126 worth of materials to this job. For the direct labor portion of this, we're going to use our labor time tickets up here. So on November 2nd, and labor time record number 1, employees worked long enough producing these cards for Allen Company to earn $140 worth of wages. On November 3rd, in labor time ticket number 2, employees earned an additional $300 working on this job. The job finished on November 3rd, so that is the date that we are going to allocate overhead to it. And we already determined that our overhead allocation rate is equal to this 130% that we had over here. So to figure out how much overhead gets allocated, we need to first figure out what our total direct labor costs are. Actually, let's do direct materials first. Direct material costs were the sum of these three numbers. So we had $1,173 in direct material requisitions on this job. Direct labor is equal to the two amounts that employees earned working on this job, which was $440. So the amount of manufacturing overhead that we're going to have is the $440 of direct labor we had times our allocation rate of 130%. That's $572 worth of overhead that is going to get allocated to this job. What is the total cost of the job? Well, it's equal to the sum of our three cost components. So if we had $1,173 in direct materials, $440 in direct labor, and $572 in overhead, we had a total cost of $2,185. To find your unit cost, you simply take the total cost and divide it by the quantity of goods that you made. We had a total cost of $2,185. If we divide that by the 5,000 cards that we are making, we're going to find out that our unit cost, rounded to the nearest penny, is 44 cents. So each business card we are making costs us about 44 cents to make. Now that we're through with this job is done and its job cost record is set, let's record the journal entries for this job. Scrolling back up to the top, the first thing that we have, let me make this a little bit bigger so you can see it, is that on November 3rd, Bateman Company recorded the journal entry for the use of direct materials in job 1. Well, on November 3rd, when we record the use of materials for our requisitions, we're taking the costs of goods that are sitting in our warehouse, our raw materials sitting around waiting to be used, and we're actually putting it into the cost of the jobs that are in process. So our debit is going to be to our WIP inventory account, work in process, which is an asset account, going up. How much is it for? Well, that's what the job cost record is for. See, the amount that we have to debit is equal to the direct materials costs of job number 1, which is $1,173. What is it coming out of? It's coming out of raw materials inventory, because these are no longer goods sitting around, and it's going to be for the same exact amount, which is that $1,173 that we have here. What we did is we requisitioned direct materials for job 1. On November 3rd, we also have to record our direct labor expenses. So let's go back and find out how much direct labor was for job 1. Our job cost record tells us that our labor costs were the $440 we have right here. Well, that is still a direct cost of a job. It is inventoriable, which means those labor costs are also going to go into WIP inventory. And it was $440. Let's just assume for this that we haven't paid them yet, and let's put it into wages payable. Though it might be cash, but for this one, wages payable is fine. And what happened here is we recorded labor costs for job 1. I like to capitalize job. On, not February 28th, but November 3rd, we have to record our journal entry to allocate overhead to the job. So one more time, let's go back to our job cost record. We allocated $572 worth of overhead to this job. Well, when we put that in, we're going to also put that into WIP inventory. So those are the three cost categories which are inventoriable, as they say. The costs that instead of writing them off as an expense, you put right into the cost of the inventory that you are producing. They are your materials, your labor, and your overhead. we're going to do here is take it out of manufacturing overhead. And manufacturing overhead is a transitional account, so it doesn't actually have an account type. It's only there for pulling up all of these costs we can't directly trace to a job before we spread out those costs amongst our job. So we allocated overhead to job 1. Another November 3rd coming up right here, and this is that Bateman completed production of job 1 and we transferred the cost to finished goods inventory. Well, that's easy enough. What was the cost of job 1 when we record this November 3rd entry? Well, the cost of job 1 was its total cost, was $2,185, and we finished it. So since we finished it, we're going to take it out of our WIP inventory and put it into our inventory account, which tracks how much inventory we have that is in a sellable condition. These business cards are done and therefore sellable. So we're going to put the $2,185 cost of job 1 into our finished goods inventory account, and we are going to take it out of WIP inventory. And here we transferred the cost of a completed job to finished goods, which you can abbreviate to FG, inventory. Below, on November 3rd, we're going to have 2 entries. We're selling these cards to Allen Company, and when we do, we're doing so on account. Since we are selling inventory, we're going to have to record 2 entries like we always do, one to record the revenue and one to record the expense. So on November 3rd, when we record the revenue, we debit how we're being paid. This sale is on account, so we're going to put it into accounts receivable for the sale price, which was $8,500. And we're going to record the revenue that we had from this sale in our sales revenue account, which gets credited also for $8,500. We recorded the sale of job 1. And then again on November 3rd, we need to record our cost of goods sold in this transaction. So we're going to debit cost of goods sold, which is an expense account, for our cost of producing job 1 for Allen Company. And that was, again, from our job cost record, $2,185. So we're going to put that into cost of goods sold. Well, up here, when we finished that job, we took the cost of job 1 out of WIP, put it into finished goods inventory. Well, now it's not going to be sitting in our inventory anymore, so we sold it. So what we need to do is take it out of finished goods inventory and put it into the cost of goods that we actually sold. So our credit is going to be to finished goods inventory. Asset account going down, also for $2,185. And what we had here is that we recorded the cost of goods sold on the sale of job 1. Good luck on your quiz, everybody.